Hello, this is Coach Mike from winningstockcoach.com. Gonna start off with my weekly market overview video. One thing that we've talked about over the past couple weeks is a couple downside targets that we came very close to. And last week we talked about in the video that even though we had that large lower wick, that hammer candle on the weekly chart, that we needed to use the direction we saw early in this past week to give us an overall sense of shorter term direction. So one target area that I've talked about on the S&P 500, which is the SPX chart that you see displayed here, is 1986.64. Now, one thing that I say repeatedly is I don't really focus on the actual to the penny price. It's a general area. And if you go back and look at the whole string of videos I put out weekly, you'll see that for 50 consecutive up and down moves, we've been within 0.5% of these up and down target areas. So, fairly accurate. And one thing that I've said over the past few weeks is even though that I thought a poor earnings season, which, we started this past week with financial stocks, most of them missed on their earnings, that we could get down into the area of 1894.95, that we would have to wait and not focus on that lower target area until the 1986.64 was broken. Now, one other thing you'll see on my chart here, these two purple lines, are swing points. Those swing points on the weekly chart are just annotating the low weekly close here and the high weekly close up here. And what you can also see is that the last high point on the S&P was higher than before. We call that a higher high. And at this time, with failing to close below the lowest weekly close, we still haven't made a lower low. So one thing that you regularly see is that when you are making higher highs, you do come around and make lower lows, or higher lows, I'm sorry. But one thing that does stand out on top of that is the fact that we are just starting the new earnings season, and so many of our financial sector actually did, I won't necessarily say poorly, but poorly in conjunction with the Wall Street expectations. And because of that, we need to really hold near and dear the values that will hold as our support should we identify the possibility of an up move. But we also need to know those values of support, which, if broken, will give us that proper indication that we could then focus on our lower target area. So one thing we want to look at is our previous weekly low close point of 2002.33 cents. Obviously, we failed to close below that this past week. We spent some time below it. We were even below it for a bit on Friday, but Friday ended up kind of popping up from a small gap down that we saw and kind of running upwards most of the day. That was a single day of trading, but at the same time, it's something that we have to identify. The weekly candle failed to close below the support point we've been watching. So in reality, if it were to make an upwards move from here, it would actually make perfect sense. Why would it make perfect sense? It will not make perfect sense if you're trying to justify valuations based on earnings, because quite literally for the past 2 years, that hasn't made sense. Where it will make sense is in the fact that, once again, we had a higher high, which could give us the expectation that the markets will see a higher low. And should we move upwards from here, we will now have that higher low and the possibility to get an upwards target area of 2109.11. And again, should we fail this target area that we've pretty much got to count as something we hit, we came within our 0.5% of it. If we fail this 1986.64, or even more so fail that weekly low close of 2002.33 cents from the beginning of December, we will then have to look at that downwards target area of 1894.95. As I move over now to the Dow Jones Industrial Average, that's our DJI chart, we see something very similar to what we saw on the S&P. We had a higher high close on our weekly. we have failed so far to make a lower low close. We did come within 0.5% of our target area with the low price seen on this dip, but at this point, it could very well be possible to, after a higher high, make an upwards move that would indicate that we have seen a higher low and take us up into a target area around 18,279 and 41 cents. So where we're at so far this week, and I hope you get what I'm trying to imply to you, is that we want to be sure of an up move before we try to jump on it and take advantage of it. And let me explain why. Even though the technicals on the chart say an up move from here would actually make pretty darn good sense, we also have those fundamental aspects, such as our financial stocks doing so poorly as a sector overall, that we also need to factor in to our current market status. So one thing that I like to do with most of my trading is get a bit of a confirmation. Some of that confirmation can be made on shorter time frame charts, such as a daily chart, or even one I love to use, a 60-minute chart. And as you start to see bullish patterns develop, you can start to scale into trades simply based on that. Moving over now to the RUT, this is the Russell 2000, the small cap index. One thing that we've talked about the past few weeks, since we had a little bit of a higher close during a holiday week, that was Christmas week, and we gave it all back during another holiday week, New Year's week, we talked about the importance of holding above the support point of 1152.45. As you can see, we've come down to it 2 weeks in a row. We failed to get a weekly close below it. Should we get a weekly close below that point, I believe the short target area to be looking for is going to be 1078.06. But until that point fails, any upwards move has to be regarded as a higher low after a higher high was made, which could project us to an upwards target of 1238.23. I actually am at a point personally where, due to the up move over the past few months in the Russell 2000, after it was the index that really got beat up bad in 2014, I found the up move actually got me to a point on a lot of charts that I watch that are small cap charts that could actually create quite a momentum trade to the long side or the short side with very little movements from the current price. So I would have to say that moving forward into the upcoming week, that though it might take until Tuesday or Wednesday to really get a true clear-cut confirmation on those stocks, that they are ones that could give some very nice returns based on their current price points and the position they lie in association with the index they trade within. And now finally, we're going to move over to the NDX. This is the NASDAQ 100. And one thing that you will see different on the NASDAQ 100 chart from the DJIA, the SPX, the RUT, is that through its pullback and then subsequent upwards move, it actually failed to make a higher high close. And it actually has here now made a lower high close, but the difference in this particular pattern is that during the time when the S&P and DJI made their last pullback, they actually pulled back just to a swing high point from mid-September of 2014, were able to hold that point before moving upwards again. That point is indicated here where you see my crosshairs in the value of 4,109 cents. From this point, with the NDX failing to close below that, you will see that the low for the week got really close to our 40.64.45 target, which we like to see, but with failing to close below that weekly high swing point, we still have to respect that as a support area, an area that the stock could just move upwards from. Now, if we get an upwards move, we have to now also identify the fact that it did before make a lower high. We can't just be stuck looking at the moon, failing to realize we might be standing in quicksand. It's one thing I tell members of the coaches roster all the time. And though an up move could eventually break out really large for us again, maybe even to 47, 25, 71, that general area. Because of that identification of the lower high and now lower low that were made, we have to understand that an upwards move that would replicate the moves already seen could only take us to 43, 12, 20. And should we stop an upwards move about that point, that would set up to me a very, very good short opportunity that was very similar, or that would be very similar to what we saw at the beginning of 2014, where the NASDAQ took a bit of a tumble clear up until March, April timeframe. Early March it started consolidating, but it was in April when it finally made an upwards break for most of the stocks. And we could use that to our advantage should we replicate those patterns. But by simply identifying lows and highs and whether or not they are higher or lower than the time before, and not convincing ourselves otherwise, eliminating the human error of thought from the actuality of what we see, we could take advantage of long trades, knowing those long trades might not give us a very high target area, but be prepared for a higher target area should we break. But should we pull back from the lower target areas of our long trade opportunities, be prepared to exit those trades with profit and begin our short trades from that point. This is Coach Mike from winningstockcoach.com, encouraging you this week to actually understand a couple things. First off, Monday is a federal holiday, Martin Luther King Day. The U.S. equity markets will be closed. Holiday weeks in general can be a little bit slower, a little bit less volume. But at the same time, we're at a point on the charts where it is not going to hurt you to let a little bit of a move in either direction occur. And to let those moves occur to simply give you the confirmation to a point where a higher probability trade can be made. I wish you the best of luck in the upcoming trading week, and God bless.